So we're talking here about the profile. I'm going through the week, and if you essentially, I broke the profile out. This is the mini June 17, 2000 contract. We're just going through what's essentially taken place over the last 5 days. One thing I want to note is that since the 13th, if you didn't hear what I explained earlier, we had a period of time over almost the last 2 weeks where we've been doing nothing but one time framing higher. That's just very simply as a term in market profile that denotes higher lows every day, not necessarily higher highs, but we haven't reversed and gone below the previous day's low. And that, especially with these gap ups related to the French elections earlier this week on Monday and Tuesday, we continued one time frame higher. The important thing to note is that we stopped one time framing higher on Thursday. So we went below, and on Friday we went below the previous day's low, even though it's just a couple of ticks. But that tells us that we're either due for a balancing or this has been a reversal, okay? And I always like to start off a lot of my research and what I like to call trading or homework prep for the previous week with the last 5 days in relation to what took place the previous 5 days, which essentially I've already analyzed. And just doing that, breaking out the profile, essentially you can toggle the splits through this software, which is Linsoft's IRT. You may have seen similar types of market profile software. There's a lot of different software vendors out there that do market profile. I just choose Linsoft because I feel it's the best for this type of analysis, and it's also the best for the delta print, which is more of an execution order flow that I talked a little bit about on last week's webinar. So I like to break the profile out. I like to look at the last 5 days, and if we have some time, which we should, is to be able to do what's called a replay. And I can start off the replay with the last 5 days, rather than, because it can be just a lengthy process of just starting to build out the profile. I found it easier with students to just split out all profiles and just walk through what took place each day, okay? So just some notes on the longer term of market profile. We have, essentially coming into earlier this week, we had a gap up situation. Now, I tell a lot of students, don't fight the gaps, especially as a new or consistently profitable trader. Don't fight the gaps, is because right now there's a lot of uncertainty internationally of domestic policy, okay? And obviously we've got elections. I think that the elections brought at least some certainty that either Marie Le Pen or Emmanuel Macron will win the French presidency, but really what we saw earlier this week was the momentum players just wanting to get off the sidelines and take the market higher, essentially try and probably test again the 2400. There really hasn't been, in my opinion, any longer term or big players present in this market. They were present after the election, and they took us up decidedly. But as far as recently, it's been more just momentum players. And the reason I talk about that from the most biggest or the largest of the macro pictures of what's going on is because you have to really determine first, in my opinion, what players are present in the market. And the profile can show you that, but it takes a little more perspective, understanding sort of big or longer term context of what's going on inside the market, okay? Now we can just look obviously at the last 5 days. I also choose to take a look at the composite profile. You guys have probably seen this before, but essentially this is a daily chart. Green bars up, red bars down, and the associated volume is compiling on the right-hand side in the blue shading areas, showing all the volume that's taken place. And each of these red and green lines that you may have a hard time seeing, but on the right-hand side here, these designate both high and low volume nodes, so essentially peaks and valleys in the volume data that you see, okay? And actually, I think I probably need to do a quick scrub of this, but just to clean up the data a little bit. But and actually not that much got scrubbed out, so looking pretty good. Sometimes when you do a scrub, it kills the software, so let me just restart this again. So while the software is restarting, some of the other notes is that when you have gaps that are created by momentum traders, okay, the key thing is that when you split the profile out, you can actually break down what took place. And I'll go through it. I'll split out the charts when the software restarts back up again. But I usually don't fight the gaps. Now, you guys may have heard me talk about slingshot trades, which is just nothing more than a pullback in a trend. Typically, that's what I'll take advantage of first, if there is any pullbacks that we're offered the opportunity to see. But a lot of times when the long-term money is on the sidelines, or at least it's in stall mode, if you will, you really have to go off of what the momentum traders are doing. And the problem with that is that momentum traders are, in terms of how the profile is built out, they're a lot less reliable. So essentially the patterns, the data, so forth, it's more erratic than when other time frame players are in. It's not to say you can't make money doing it, but they have been present. All right, so this is the profile. Go back to the composite. So what's important with me on the composite is that I take a look at, and we can drill it down into a more micro format. I always want to look to see, have we breached the previous high, which we haven't. That was 23.98. That was set back on the 1st of March. Okay, since then we've essentially been balancing between 23.98 and the low point of this here, the pullback we had at 23.18. So I want to look at this whole area, and I want to determine where the 50-day moving average is, where the 100. You can see the blue line is the 50-day moving average. The brown line is the 100. And then the 200 is way down here at the 22.41 area. But I want to know where those are. I want to note where the pivot point is from a daily perspective. And then I also want to note the Fibonacci retracements. Okay, in this particular case, the fibs are off of the most recent swings. So let me just get rid of the... So we can look at the volume of each day and the points of control. This has a tendency to muddy the chart up. So a lot of times what I'll do is I'll just remove everything off the chart. I'll take a look at the volume, make sure that we have data pulling through the entire period of time. All right, good. Note, for those of you new to the term of high and low volume node, essentially peaks and valleys in the aggregate volume data that you see in the blue shading on the right-hand side, note that a lot of times the market will stop and reverse or will balance around a given area, okay? And in tandem with this profile, which is just price action and volume, okay, doesn't necessarily represent time. And that's where the weekly profile comes into play. So if I open up the weekly profile, that's a good question. I have some newer charts. I know that maybe some of you guys haven't seen some of this. This is a weekly profile. Okay, so as you can see, this is the same period of time that we were looking on a composite chart, the previous chart. But this just breaks down in each day by a color, okay? And you can actually toggle out and split out these charts as well, but I'm not going to do that. It'll just confuse you. But this is the time component, okay? So we can look to see from a weekly perspective. The only information I'm looking to glean here, again, is the time side of the equation as far as our larger time frame macro analysis that I like to start the week off with. Each of these red, maybe showing up as kind of pinkish lines, these are points of control from a time perspective. So this is allowing us to see where all the time was spent in trading. So note that the 23, let me just drill down into this. Note that the 2385 level is our center point, whereas the previous week that we ripped up to the high, just under 2400, the points of control down there is around 77. Notice that particular point of control, or the zone here, if you will, that's been created under at the bottom of this. I don't just pull the drawing tool. I'm not really a big fan of drawing tools because it's hard to erase them in Cisco's WebEx, but essentially this line right here, there's really been a line in the sand. And you can see, looking at it from a time perspective, because it was the center point of the previous week's trading, along with, from a time perspective. So you want to note that on your, and then obviously the highs. We held this level all week. And, a lot of people say, well, if it's momentum traders, and this is just an observation that most traders will make, if it's momentum traders that brought the market up, are we due to fill the gap? And the answer, normally, it's essentially in an environment where you don't have a volatile potential news breaking with international incidents, not only with the Middle East as well as Kim Jong-un, the knucklehead in North Korea. It's probably going to get squashed at some point, but he just doesn't seem to think so. Creating problems along with some big packages that the administration is looking to get passed. All of that has just created uncertainty. And if you guys don't know this, the market hates uncertainty. It freaking hates it. So when we had a little bit of certainty, albeit there's going to be a runoff election in France, I don't think it was a surprise to anybody understands momentum versus longer-term time frame traders, that we were going to just probably rip this up. We had a lot of people sitting in cash. Question is, will we get down and fill the gap? I can tell you that we will fill the gap if the news breaking this week is not positive as far as getting policy through, especially related to tax, and there's a chance that we could go back down. But for now, and I'll just get out of this chart, but what else we want to note on this? So we've got our top point here. You can see that somewhat coincides, so you can put a zone of maybe 3 points on this top part. If we are going to basically enter next week in a balancing period, these two zones are your tradable zones, both high and low, okay? But just because the movement of the market goes up into or down below into these zones doesn't mean you just blindly take a trade. You just want to always be looking at where your areas of confluence from perspective. There's actually a sheet that summarizes all this that I subscribe to, just makes it a lot easier to see all that. I'll show you the sheet. It's from these guys that originally started Rand Squawk. It's called To the Tick. Let me just get rid of this here. All right, so that's the longer term. Let's jump back to the composite. Let's take a look at price and volume. So there's a lot. I mean, obviously, if we can get through the 78, if you will, to about the 80 area, if we can clear that, we probably could sail all the way down to easily 70, 74. Okay, we've got a potential reversal, but it's probably an easy 5 points if we can break the bottom of that. The problem with reviewing what took place in the previous week, 2 weeks, months, whatever, this entire balance zone, essentially the last almost 2 months, is that it's difficult to predict, or I like to call envision, of what can happen on a larger, a broader move perspective, just because of the uncertainty that's going on. So running through what took place, looking at different scenarios, I think is important, but it certainly can't take the place of, being more on the cautious side. I don't take a lot of choppy trades. I take mostly just outside of what I like to call extreme trades, okay? Because if you think about it, the market can only really do a few things. It can be outside of a given area of balance and trade back into it, right? Whether it's a longer term value area high, breaks down and trades back inside of the balance area, or it can continue to break out and trend higher. So the weekly, this composite, and then I'll move into the day types chart. And for those of you that don't understand market profile, day types is essentially just that. What type of day did we have? And I'll take a look at that. And that'll sort of finish it out for the longer term analysis. This is the day types chart. You keep in mind, these are all custom definitions that are built into IRT. I have these available if you guys use Linsoft. The problem is that a lot of the stuff I'm showing, if you haven't been a regular member and seen me go over this over again, or you haven't been through our full trading course, it may be hard to understand. But just from a generic analysis standpoint, you want to take a look at what the week did from the standpoint of day types. If you go to my website, FXESTrader.com, or the mini course that many of you have subscribed to, you can read about the day types. I think it's important to learn them. They can really foreshadow what potentially could take place again in the next couple of weeks based upon what's taking place. So we had a couple of, let me just see here, 20. So here is the first gap up on the 24th here, okay? Now you notice we're just looking at a day session, so this is the RTH session only. If we were looking at a Globex or a 24-hour data in here, this would be a trend day instead of neutral, okay? Essentially neutral day opening up and spending most of the day within balance. We had a normal variation day on Tuesday, neutral extreme, okay, which I thought was going to be an island reversal candle, but essentially we had a lot of range up and came all the way back down. This was one of the first reversals, and to bring us back down inside of what balance area played out for the rest of the week. But on the reversal on Wednesday was a lot of it related to just stuff coming off the hill and tax policy. So it's been really hard to read into what really took place in each of these individual days. But we had a neutral extreme, we had a neutral day, just like on Monday, and then we had a normal variation day on yesterday, the 28th. So those were the day types and how they played out. When we go into the review of each of the days, that's when you'll be able to see what trades should have been taken based upon how the profile played out. Next week, when I get into the review, I'll go through what I use as outside of just the to-the-tick sheet. I'll go through what sources I use to analyze the markets. So, what trades should have been taken? And I know that that's the question that is often asked. I don't know what is going through the minds of many of my students, whether they're actively trading in the market or they're learning how to trade. But one thing I can tell you is that a replay, which we're going to go through right now, of what took place and the trades that should have been taken, even though I may be telling you, or even if I was sitting next to somebody live, telling them where to trade, it is most important that you understand why than just me trying to fish for you. I'd rather teach you how to fish, and that's actually a big reason that, along with some of the FINRA regulations, that I closed down my trading room, because I found that a lot of students that were quite lazy were not interested in learning how to fish. They just wanted somebody to fish for them. You will never be successful at trading. I can promise you that, if you are just looking for trades, if you're not looking to learn how to read the markets and really spend the time diving into this. And I know that a lot of my colleagues that teach different trading, I'm pretty tight with some of the guys I showed on the webinar. Many of these guys are really big traders, and they trade, using order flow and the profile and so forth. But they think I'm a little too harsh on students in how I really want to shake them out and sort of wake them up to the fact that you really have to, find a mentor that can certainly help you cut the learning curve. And, whether we're that type of mentor for you or not, I don't know. But it's critical that you put aside, any laziness that one may have, and, really dive into this. Have a passion for it, right? And the passion can be the drive that will push you through many, many boring days of just watching the market play out. And I always tell people, if you're bored, just sitting around watching grass grow or price action, you should be doing something that is related to teaching you or reviewing everything from any type of technical analysis, understanding simple candle patterns, to learning more of market profile, to sort of be able to read both time and volume for the build outs of most of these 30-minute brackets or so forth. But it's important to just sort of dive into it. And I've probably spent about 11,000 hours so far since about 2007. I started actively trading futures about a year after leaving a number of different RIAs that I was raising capital for at the time. We go out on my own with my colleague Andrew at the time, formed our long short fund, started trading actively for some clients that we brought over. But looking at the profile here, first we started off with Monday's open here, and you can see, let me grab the pen. Anytime you see a blue, almost looks like a zero, this is the open. Okay, so we opened up and we tested down to start. So we had an open, auction out of range. Okay, meaning that, here's the range high from the previous days, and we opened gap up outside of it. So we had an open auction out of range. The initial thoughts were, wow, from a risk management perspective, we're gapping way up. Should I just jump in and short the high here? Okay. Well, if you had right off the bat, you could have maybe pulled yourself out a couple of points. If you were looking for us to completely fill the gap, I wouldn't have think it would have happened, because we made it all the way down to the 65 area, and then we bounced up, and we, I don't know, maybe two-ticked the previous. Was that 1, 2? It was about 5, but we four-ticked the high that was built in M&N bracket. You can see right here. That possibly would have been a trade. I didn't do any trading on Monday, at least in the futures markets, on a gap up, because this was nuts. And a lot of times I won't trade off of nuts. I'll just sit on my hands And sitting in cash is a position. So from a risk management standpoint, you're protecting capital potentially that could have been lost. This is a great example of an outside day, right? But it came on news, big news. So I wouldn't have traded that. So moving into Tuesday, what would we have done? Now the problem with taking any kind of shorts is that we had an open test drive day. Okay, and I'll show you how that worked out. Remember, the opening type is very key to understanding because it can teach you a lot about the power that may be building of, in this case, the momentum traders that brought us up. But we had an opening here, and we had a little test, and then we had a drive right off of the open, first half an hour, this D bracket, okay? And then we formed what built out into a P-shaped profile. Now, if you guys listen to a lot of my stuff, I'm always telling students to be on the lookout for a B-shaped or a P-shaped profile, especially if it's very concentrated in the range that is built within that either P or B shape, because the ticking of the top can be a great example of a short. So this is one of the first times all week that I took a short in really just a stop run, if you will, coming into some other important areas on the long-term composite. 89 was a low volume node that had been formed out from that previous attempt at 2400 towards the beginning of March. So this was an area of confluence on more than just this chart. It was a whole bunch of other stuff, including some Fibonacci retracement and extension type. So the confluence that built here was the first trade. And I didn't get much off this trade. So I think I got 5 points off because I didn't catch the top or bottom of this trade. Was really looking for our bracket to break the bottom of this P shape, essentially to run down this buying tail, what we like to call the zipper. This is called a buying tail. Okay, that's ideally what the runners I had left on. I was having them as a goal to try and get all the way down the bottom of this and get a decent trade off this, possibly even flatten out at the previous day's high. Okay, so coming into the Wednesday, what do we know? Okay, so we know that two gaps up. We know that we've had very little attempt at any substantial pullback to fill the gap. So what's that telling us? Remember, I always like to say the market is, from a profile perspective, it's an advertising mechanism. And it's advertising what? That there's momentum in the market, but there's really not a lot of selling, and there's buying in every pullback. So now I'm coming into Wednesday with the thesis, or what I like to call a hypothetical. I've got two scenarios coming into Wednesday. One, we gap up again, and then we go up and test that all-important area up there of the previous all-time high, in which case I absolutely would have taken a short, especially if we had flashed into that right off of the open. So if we had seen the market open at, hey, it really doesn't matter. Ideally you wanted to see the market open here, drive all the way down to the low of this previous day's P, and then just completely rip back up to this area on a fast move, but with much lower volume towards the top. That would have been an excellent opportunity to short. I did not get filled on this move up. I really should have been taking a smaller short on lower price, but I actually thought we were going to just take a shot at some point later in the day on Wednesday, all the way back up to the high, and I absolutely would have shorted that. Because the order flow right here was showing that we were probably going to have a pullback. But from the perspective of just analyzing the market from a profile standpoint, that movement up to this area, had some volume. You can see that in the you see called orange shading area, the lighter color red here underneath. That's just the volume that's building out in the profile. So coming up against this, the other observation from Tuesday is that we didn't get under by any measure, not even just a couple of ticks. We did not get under the bottom of the P shape of the profile. So any type of pullback or any type of short from up higher, you're absolutely going to want to have the majority of your scales out or profits taken out, depending on how many contracts you trade, at this level, if not be completely out of any shorts that you may have taken from a higher level. So it's easy to see that on the profile. Let me just erase all this. So we know coming into this week that this is our zone right here. And as we came in and touched that, we were, what, 3 ticks? Is that right? 3 ticks away from the low. And that was our Tuesday open test. And then we drove. That was our open type. And we had a P-shaped profile was built out. Now, coming into Wednesday, we have our hypotheticals in place. Ideally, we had a lower high here. The order flow was actually showing ourselves as we pulled back up against this here. This was more of the an order flow type short I took, which is actually my best paying trade of the week. Got a decent move all the way down on this. Didn't take any longs any of these days. Now, there certainly was a slingshot right here, the bottom of J bracket on Tuesday that could have been taken. I don't think it was enough of a pullback. My hypothetical for that would have essentially up here is the best place to be is take a shot short somewhere up near that 89 level, which we did. Ideally have it break. Would have been completely out of the trade by the 77, 78 area, essentially where we opened up. Notice we had lower lows each day. So technically since the 26th, we've been one time framing down, but with not a lot of fervor. So I'm not reading that much into see each day has a lower low. We're one time framing down. I still think this 78 to 80 area zone is really going to be a line in the sand. I mean, right now, the momentum traders, anytime we've come back down into these areas, there really hasn't been a lot of order flow that's showing itself on the delta print chart. So that's kept us in tight. So ideally, when you look back at all this type of research, and the argument certainly could have been made, by the way, for this to have been a short. I did not get filled on this trade. Okay, didn't pay much. But as we're coming into almost like a flag pattern, which you can kind of see here. The bull flag. I really want to see us take a decent run at the high and the market really get to show, if we have a decent enough move, the market really get to show maybe on some, some decent news from the Hill that we're reaching settlements, potentially a vote on either tax plan or healthcare. The market needs some certainty that, these types of piece of legislation may get passed to take a run, probably at the high. My hypothetical at the high will probably be to take a short at that area, depending on the move. I love to see flashy, crashy type moves into big zones quickly and have fast rejection, something you can see on the footprint chart, in order for me to want to take a trade on that. And then ideally that trade moves us all the way down, maybe a bit of a pause, and it could even take into Tuesday or Wednesday if that even plays out, and essentially just get down and fill the gap both days. Okay? In which case, if we get past this area with a volume and some sort of oomph in the movement, I will be shorting all of the spikes all the way up, essentially all the way down the downside. So ideally, you want to see us, this is almost like a big flag you can draw out from just a hypothetical standpoint. And keep in mind, I'm just drawing patterns, and there's a lot of other things related to this. There's a lot of other types of technical analysis that are showing different areas of what they call confluence. And that's other stuff showing up as a grouping. But that type of confluence, you want to look to always be envisioning what can play out in the market using, this and all the other types of analyses. I'm going to focus just on these Saturday sessions of using market profile, the long-term composite chart for both time and price, to envision what can happen from a hypothetical standpoint based upon what happened in the past. So I would be looking essentially in the ideal envisioning process to be short the high somewhere near 2400, and that's provided that is not a long, slow grind into that where other time frame is stepping in and putting volume in the market. We don't know that's going to be the case at this point. We're always on alert for that. But ideally, this is a stall out on that short to get down. And then what will more than likely happen is you'll have a pattern like this that'll play itself out. Every one of these slingshots on the top are all the types of shorts I love to take. And they'll all show up at important areas of both high and low volumes, nodes, points of control, value area, highs and lows, not only from a daily perspective, which is this magenta bar here, but the corresponding volume value area high, which is in the background. I'm assuming you guys knew these levels of colors on my charts, but just to reiterate, this is the initial balance. It's the red area here. This is the initial balance. It's the first hour of trade. It's represented by both D and E bracket. The magenta, or whatever you call this pinkish color, this is the value area from a time perspective, capturing most. And then in the background, you see the brown, and that's the value area highs and lows from a volume perspective. Okay? You always want to pay attention to this. It's easier to see when you look at the weekly profiles. So when you look at the weekly profile, you can see where the aggregate is of the value area high and low and the point of control. Okay? So you can carry all of these values or groupings, I like to call confluence of values, over. But ideally, you need to be able to see all this, and you need to be able to go through it. Now, I'm not going to spend any time this weekend on the delta print, but I get a lot of questions about this. This is sort of a fine tuner of where to execute. But ideally, we go through this type of analysis. Let me just show real quick the sheet. I have nothing to do with To The Tick. I don't get paid from these guys. They give me the subscription for free, just because I talk about them a little bit here and there. But it's $30 a month. So essentially, what it does is it puts everything in a grouping, so you can see, the previous day's summary, Fibonacci clusters, the pivot points. Okay, they even calculate the DeMark pivot points, which I utilize. And by the way, if you guys don't know, I've got a number of really smart buddies in New York that I work closely with on, just understanding what their thinking is. One of them's name's Mark Newton. He's a chief market technician. He has his own organization, Newton Advisors. And Tommy Thornton. He's very, very He writes a daily article called Hedge Fund Telemetry. These guys use a lot of DeMark stuff, so I'm always, without having to spend $2,500 a month for a Bloomberg terminal, I'm lucky in that I can get the DeMark counts for everything that's going on daily. So we have, for those that are not familiar with DeMark, you can just Google them, but they are very accurate at calculating. It's a very sophisticated indicator. It costs a lot of money to get. It's usually only available to large institutions that can afford to pay for the DeMark, which is a separate fee in addition to Bloomberg. But the DeMark counts are important to keep in touch from a long-term perspective, because they show us where there are potential exhaustion points or potential reversals in the market. Right now, as far as the NASDAQ and the S&P, we're both on a 913.9 sell signal, which is an exhaustion point. Doesn't necessarily mean the market's going to turn around and reverse, but it means that there is a potential for us to balance. So ideally, as far as hypotheticals for next week, I would like to see us, obviously break the bottom of that P shape that we saw, but at the same time, I want to see us potentially go up and test 2,400. And who knows, 2,400 to 2380, 2378 to 80, that could be our balance area for some period of time until either the other time frame players or some sort of policy breaks to take us out of that balance. And if that's the case, you're short the top and you're long the bottom. And if you can stick to that type of plan, you can see in these Fibonacci clusters, there's a lot of stuff between 77 and 84 as our low point. And once you get underneath that, it's almost smooth sailing all the way from this is just a confluence matrix. It amalgamates or it aggregates all of the information together. So pivot points, both monthly, weekly, daily, value areas, Fibonacci clusters, volume profile, so just high and low volume nodes right here, NPOCs, these are naked points of control. If you take a look at I'm going all the way back on the profile here. Naked points of control can absolutely, along with singles, which is this black line here, can hold the market at certain levels. So if let me just shrink this down and toggle these splits out. But this is the last, let me move over here. So here's Monday, here's Tuesday, and obviously Wednesday, Thursday, Friday. Looking back, where is that naked point of control I wanted to show you? Doesn't look like I have the charts going all the way back. I just got to go back 20 days. Go back 60 days. Ideally, by the way, I must have had the times too short. You want to have your profile chart from a daily perspective. And again, this is just a session too. RTH, just the pit session hours. You want to have your charts going back 60 days. As you can see how these, both from a brown perspective, this is the volume area point of control, and the red line, which is the value area point of control from a time perspective. See how these carry forward? These could be very powerful lines, especially if they line up with other types of confluence, whether it be some sort of fib retracement or some sort of other high and low volume node. You'll typically see these naked points of control onto the downside here, especially this one at 58.50. They'll correspond with what's called gaps or air pockets in the market on the composite chart. So you can always just keep jumping back and forth till you're familiar with where all the air pockets are. Be right down at this 100 line. I saw a lot on Twitter. People were asking, well, why did we reverse so heavily down here at the 20 area? Well, I mean, look, we were right at the 100-day line. This is just a simple EMA, and we were in gap up range. This particular point here at 18 was sort of this was the edge of the cliff right here. Okay. So one thing I like about looking at the composite, a little easier to see than obviously toggling back and forth between the profile split out to a condensed profile. It's easier to see why things stopped and turned around from a long-term perspective. But I think it surprises a lot of new students that these high and low volume nodes, we've got a pretty good amount of time, right? We've got, what, 2 months, a little bit more, in volume that's built out up here under this 2400 zone on the ES, and we're looking at essentially an 80-point range, which is not difficult for us to completely traverse in a few days if other time frame players step in and all of a sudden decide to back and fill this market some more, maybe go back down and get some of those gaps. I mean, we have a ridiculous amount of gaps below us. So from a structure standpoint, the profile is, there's a lot of incomplete structures, and from a large, from like a longer time frame perspective, these markets are going to need to complete the structure. So at some point, we're going to have to go back down and get these gaps. We've got gaps all the way down to 666, which was the bottom of the market in March of 2009. I'm not saying we're going back down. I'm just saying we have a lot of really incomplete structure all the way back down. So, I mean, the market can be irrational a lot longer than I can remain liquid. So, I mean, you have to trade what's in front of you, even though you may have, but just from the understanding of market profile and how well it has played out in history as far as understanding historical movements and price action, we have a lot of incomplete structures down below that would lead me to believe at some point we're going to have to go back down again. It could be 10 years from now, but at some point we're going to go back down and complete those profiles. What else do I want to note here? So hopefully this has given you guys a good understanding for how to read the composite and how to read the profile, how to look back the previous 5 days. You can make these real small so you can see each day broken out. Look for the naked points of control from both volume and time. Okay, you can scroll all the way down and all the way back to look at all this. Don't think that anything below 2318, which was the low movement in the middle of April, is worth analyzing at this point because we're not anywhere near there. But it can help you understand just the broad or the macro view that you can place on the market. And that's what I want to do, looking back and just seeing what took place, what hints can I get from the 80-point range that we've been in since the beginning of March, and how that can play out in terms of me envisioning, or as a trader, you guys envisioning what you expect to play out in the market. Now, next week, I'm going to go through the type of homework I do. So in addition to all of this, I'm actually going to add on, I'm going to run through this real quick next week, depending on what happened, obviously. And then I'm going to go into specifically the types of analysis from a news perspective that I look at coming into Monday morning. So the sources that I use, they're not just me. I bounce a lot of my thinking and what can happen in the market off of not only the two gentlemen I spoke to, but there's a couple of other sources that I used as well. Any questions we can answer for you guys? So this will be up on the private YouTube channel about a day. If you guys want the mic, just let me know. I can open up your mic. Yes, this is the version. I think it's 12.7.2 of Linsoft. Yes, this is the new version. The software is 100 hours a month, and it has a couple of different enablements in it. It has the market profile enablement, which is $20, and this is being fed with DTN IQ feed, which is about $80 a month. This is what's called a non-professional license. Did the Delta profile show a top at the open on Friday? Delta profile. You mean the Delta print chart? What you're looking at here? This was Friday. This is the entire order flow for Friday. Notice we stopped at 89 again. You're not going to see a lot of the other lines carry over into this chart because I use different charts for that. But this is strictly just order flow with a VWAP on it. That's it. All the stuff at the bottom. I'll go into this in other webinars, but we had over a 5-to-1 imbalance, as you can see at the top with the sell side. I don't know that necessarily was ringing the bell to get short. But one thing I do like that I mentioned earlier, I love these quick rips. This was actually a news-related rip, and it was just an absolute barbecue for all the stops that were up here for the shorts playing in. It was a face rip, as I like to call it. A lot of times I like to get short or long into those types of moves because it's what's called an exhaustive move. So you had the ability to come up, or you had the ability, if you wanted to take a shot again at 89 short, didn't get much off it. You had another chance essentially to almost get short, but there really wasn't a lot. Plus you're moving into let me just back up here. The other problem with Friday, as you can see in the chart here, is we opened up right at the high. I mean, literally, we're there. So this would have also been a really quick trade you would have had to jump on. Let me just go back and see how that played out from an order flow perspective. See, not a lot of tell. Most of these numbers you can ignore. You really only want to pay attention to the delta print as you come into an important zone like right here. I don't have the GlobeX profile. I don't want to confuse you guys, so I didn't bring that in, but I don't have the GlobeX profile showing up on these charts. Hopefully that answers your question. I got to run to a soccer game, guys, so I'm going to cut this off. We've been going a little longer, but I had some technical problems in the beginning, so hopefully get all that worked out with this new WebEx software, and I won't be fumbling through that next week. If you guys have any additional questions, you can always send me an email. As you can tell, I'm quite responsive. Steve@FXESTrader.com.